Let's bring it closer to Asia and another scandal. There's a new man in charge of the company behind India's biggest corporate fraud ever. Satyam Computer has named Chander Prakash Gurnani CEO, and he'll try to help restore confidence after a billion-dollar fraud triggered by Satyam's former CEO. So in the era of Madoff, Satyam, and Stanford, it really pays to look for transparent and accountable companies to invest in. At least that's the mantra that has netted our next guest 18% returns over the past 12 months. Compare that to a 34% drop for the MSCI World Index. So how has this corporate governance fund focusing on Southeast Asian stocks been able to outperform? Well, let's ask its fund manager, Shireen Muhuddin, who oversees about $80 million at Corson Smith Asset Management. And before Shireen started the fund, Shireen was the CEO of AIG in Malaysia. Shireen, welcome to the program. So let me just ask you, first off, congratulations on the 18% returns, but how do you pick your stocks? I mean, how does a company pass your criteria for good corporate governance and transparency?
Well, basically, we have a system where we look at two things at the same time. The first, of course, is that the company has to have a good business model. It has to make business sense. And at the same time, we make sure that the companies that we're looking at have a minimum standard of corporate governance. And the reason why I say we have to have a minimum standard is because, as you know, there are many companies out here in Asia, and I suppose all over the world, that if you don't have a minimum level of corporate governance, you'd actually be throwing your money away because the board or the companies or the managing directors running the companies could actually take the money and use it inappropriately. So that's why we have a two-prong approach when we look at companies.
Okay, Shireen, and what constitutes as a minimum level of corporate governance?
Okay, well, we have a ranking system where we look at audit procedures, related party transactions, the structure of the board. I mean, basically, we're looking to see that there is a balance of power on the board, there isn't abuses of power, because that happens quite often. Sometimes you have a particular person on the board who runs it as if it's their own company and have no regard for anybody else. So we actually have a point system, and that starts us just to give us a baseline on whether these companies are worthwhile looking at.
Okay, and in terms of due diligence, you expect investors and also investment banks with all their research headcount that they should be doing more of it. But how do investors avoid scams like those of Satyam and, of course, Madoff's big $50 billion Ponzi scheme? Okay,
well, Satyam, I think that whatever the case is, when somebody wants to have or wants to commit fraud at that level, it's similar to the Enron of Asia. It's very hard for anybody to know that this is happening. I mean, I think even the auditors didn't realize that some of the information they were getting was falsified. We do our own company visits, we speak to management, but if you've got people inside who are really, truly dishonest, it is very, very difficult to detect this. When you look at Madoff, he controlled the front and the back office. I think that most fund management groups will outsource their fund accounting, they'll outsource the custodian, they'll outsource who they execute with. If you have everything inside or in-house, it's very easy to cover your tracks when you make mistakes.